Welcome to Invested Souls, the podcast where real estate expertise meets relationship growth.
And we're your hosts, the Flanagans. I'm Brad.
And I'm Jamie. This podcast is your chance to learn from our experiences and follow in our footsteps. Whether you're an entrepreneur, investor, or real estate professional, we've got the insights and strategies to help you elevate your wealth and achieve financial freedom.
But it's not just all about real estate. We believe that thriving in life means nurturing the relationships that matter most.
That's right. We'll be talking about how to balance your personal and professional life so you can create a fulfilling and prosperous future.
So join us on Invested Souls and let's grow together in wealth, relationships, and success.
Ready to elevate your life? Let's get started. Welcome to Invested Souls. Everybody, welcome back. We are on Invested Souls. I'm super excited today because we actually have a couple in real estate. And as you guys, many of you know, Brad and I have done real estate together, investing. And there are some hurdles and some fun things that you do when you're together in real estate. And so I'm welcoming Alex and Lauren on the podcast today. We are going to dig into how they built a real estate portfolio, where they came from, where they are today, and what that looks like. They've got a very conservative approach. Something I loved in your bio is that like the slow and steady wins the race. And so I'd love for you to just go ahead and introduce yourselves. Just for the audience, I didn't hit record, so we are redoing this. This is round 2, which this is like tech support. I don't have live tech support. So thank you for bearing with me, Alex and Lauren, and go ahead and reintroduce yourselves.
Awesome. Well, thanks so much for having us, Jamie. I'm Lauren Rogers. And I got into the apartment investing game about 2 years ago through Alex. So we actually started as business partners, and I was looking into real estate investing as a personal opportunity. We were introduced through a mutual connection, and I pretty quickly realized that there is a lot that goes into apartment investing, but it was something that I was very interested in. We both have a background in tech sales, and I was at a point in my career where I was open to making a transition, and it just so happened that I fell in love with Alex and real estate investing.
Oh my gosh, I love it.
So that's my quick background. He has been doing investing for 15 years, so this has really started as his baby.
Yeah, good summary. So the first apartment deal I bought was 2010. So like I've been at it since 15 years, I guess. And that was a little 8-unit in Seattle, Washington. And so from 2010 to 2023, I really was just building my own portfolio kind of on the side and then working in tech, like Lauren said. So my last gig, I ran a region in the sales org for AWS, Amazon Web Services. And then I had this apartment portfolio on the side that was 125 units or something like that. And
Wow.
through some encouragement of mentors and people at our network, to just go bigger with the real estate model that we figured out. That's the birthplace of Veritas, I guess. So we are really just rinse and repeating the same model that I sort of figured out in that like 2010 to 2020 window. And instead of just buying, one deal a year type thing is what I was doing before, we're doing 4 to 6. So it's a cool thing. So we've got 15 years of track record, and the deals are basically identical in terms of like the type of them, the vintage of them, the business plan, like all of that. So lots of proof points.
What does that look like?
Yeah. So
I have $100,000 and I don't know where to put it.
Big picture stuff. What we've kind of figured out over time is, 10 plus unit apartment deals tend to make a lot more sense than definitely single families, but duplexes up to 8 or 9 units. There's just a lot of risk in those. Like you need vacancy to be really high. You need top tier rents. Like if you have one unit that's vacant for a month too long, that could blow out like 3 to 4 months of your cash flow, right? Like when they're on the smaller. What we buy is probably on the smaller end, like 15 to 20 unit buildings. And then on the biggest end that we have is like a 62 unit, but we're going to live in that like 15 to 75 unit space. As far as like the size of each deal that we buy, we only buy in Washington State. So we really believe in Washington as a market, very specific pockets of Washington. So both of us are born and raised here. So, we know this area exceptionally well, but we only buy in certain counties, certain parts of certain cities, right? Like really specific in terms of where we're looking. And that's just from trial and error over the last 15 years and knowing the it's and why. But yeah, it's 15 to 75 unit buildings, typically 70s to 2000 construction years. We're not buying anything new. We're not building anything. We're not doing anything. And like, we're just really steady and consistent with what we're going after.
That's awesome. So when you're looking for deals, are most of them, you're finding them off market? Are you like reaching out to owners directly, or people probably know you in your market based on the pockets that you're buying? A lot of our listeners are newer investors, or they're looking at how do I make, I work full time. I know I want to invest in real estate, but I don't necessarily want to be hands on because it's just, I don't have the time.
With
So, obviously working with a fund or somebody who's out there sourcing the deals and being like, you guys are boots on the ground, which is phenomenal, right? Because you're boots on the ground, but you're also, you're kind of like the win-win. It's like when you're looking at, okay, I'm going to put my money somewhere. I need somebody whose money's also involved and they care about the project as much as I would care about the project if it was my own.
yeah,
And with less hurdles, because obviously if it's a brand new investor, you have to go through all the learning of trial and error, and you guys have already gone through the trial and error.
yeah,
So how are you guys? So back to my question was, how are you guys sourcing the deals, or where are you finding them?
yeah. I think rough maths would be about half of the deals we look at come directly from owners, and half of them are, yeah, I'd say the other half come from brokers. And whether I would say 90% of what we're looking at is off market, 10% listed. What to date, we are under contract right now on our first deal that was actually listed. I've never
No.
thing in 15 years that's ever been listed. I've always been able to say like 100% of our deals are sourced off market, never hit the market, never listed. But times are changing, right? Like there's more deals to be had. People are actually negotiating. It's so we're looking at listed deals now, but I think the ratio feels to me like it's probably always going to be that like 90-10, in terms of like 90% of what we're looking at is off market and 10% market.
Mhm. Love that. Yeah, and then it is interesting right now because there's the people that are. I know when I go on an appointment, I do residential real estate, but when I'm going on an appointment, what I've noticed lately is the clients are just thankful that you're willing to help them. So the market is definitely in a different position, and they want to know that yes, you can help me sell my house. The dollar amount isn't as important as it was, when COVID was going on, and it's like apartment buildings were selling like inflated prices. It was just nuts. And so it's been a lot more comfortable lately. So it's interesting that you guys bought your first one like on market because yeah, I'm noticing that as well, just in our markets. And I'm not obviously on the coast at all. It's like you guys when you're buying like you guys are both tech. Everyone I've ever met in Seattle is tech. So like, are you willing to share? Like, are you buying like in Seattle proper? Or are you guys kind of outside on
Wait,
like the suburbs?
yeah. So I think Washington State in general has a reputation that is based in the city of Seattle. Like for people,
Right.
I wrote a handful of deals in Seattle from the 2010 to 2020 window, right? Like so, and we both love Seattle. Like we believe in Seattle, where it's really strong. We have a ton of tech. It's a very affluent area in terms of like why the economy is so stable. The reality is though, the apartment investing game in Seattle, we don't believe makes sense today. Like I can never say everything. Like we might come back into it, but there are specific landlord laws and just operational challenges that exist in Seattle proper.
Yeah.
So where we're buying is anywhere from 30 minutes to an hour, like outside of the city of
Okay.
Seattle,
Yeah.
the county, entirely different city. So Snohomish County, for anybody that's local, is the county that we like a lot right now. That's like Everett, Linwood, Marysville. Like it's these again 20 minutes to an hour outside of the city, and then Eastern Washington, which can range anywhere from a 2.5 hour drive to a 5 hour drive. In terms of the market assets in. But that is like a whole other planet politically in terms of like the way the state is carved
Wow.
out. Right? With the color code map, like blue red, like it is blood red over in Eastern
So
Washington.
funny, like how we like in real estate, we try to keep politics out of it because we're like, we don't want to offend anyone. But then when we do these podcasts, it comes up on every single podcast. I think if you listen to I mean, it's every single one. But and that's something to point out because it impacts like landlord laws, making it fair for the tenant and the landlord. It needs to be a win-win. So when we get into some of these situations, because I was like joking with an investor from California on one of the most recent podcasts, but he explained some of how you get around, like what the rules are so that you avoid the squatters and all that. And that was like such an aha for me because I'm like, well, they obviously own rentals in these markets, but
Well,
you have to really understand the market. And it sounds like you guys really understand the market. So it's like you probably have a better success rate at collecting rent, delinquency, and all of that because you know the rules and you know where to invest based on what's going to be best for your business.
yeah, I think the political thing is important to understand, but I also feel like it gets overblown. And the reality is, most really high economic areas in terms of housing, jobs, incomes are Democratic,
Yeah.
like they just are. And so when you start looking at these markets like New York, San Francisco, Seattle, I mean, like when you really go around where the true wealth is centered, most of them are not, they're left, like it just is. And so it's understanding, hey, like what are the market forces that are going to actually matter to like a multifamily investor, like why that matters here, why we want income and all of these things to continue to be so high. I mean, like when you look at these markets that we're in, and we're talking tertiary markets outside of the city of Seattle, median houses are $800,000. Like it just is. And so what does that matter to us? Like our workforce housing demographic, like the renters that we're serving, unfortunately are probably not going to be home buyers. Like it just isn't. Like you need to make 250 grand a year to afford a house in these markets. Like it just, and that's a lot. Our tenants are averaging $90,000 a year, like that's their income. And so it's, I wouldn't want, I hesitate to say, like, and I would never say avoid politically left markets because that's usually where most of the money is. Like we saw a lot of this happen with COVID where a lot of operators and investors went to markets like Texas and
Mhm.
like Arizona and they went to Florida and the Sun Belt, and they just went down there and just bought a bond. And the whole thesis was like, hey, we're going to go where people are moving because of this political thing. What
Believe then.
for touring, you look right now, and it's like rents are down like 20% in a lot of these cities. And who knows what they're going to recover to? Because guess what? There's land out there. Like all the developers went out there and built a bunch of stuff. And so now there's all this new supply. So like, what does that do to all the existing products? Like reduces demand, reduces rents. You'll even forecast rents for the next 5 years in these markets where there's been just a lot of new supply and then people actually moving back out again, and they realize like, hey, this isn't like the promised land they thought it was going to be, and they're going back to where they can make money,
Well,
like,
there's a return to office too.
yeah,
So it's not only
Yeah.
are choosing, and they're happy to move back, and then they're pushing more people into these markets right outside of Seattle. But I think when you stay close to really big cities that have historically had high and consistent rent growth and strong economies, that feels better protected than chasing, oh, lots of people are moving here. Like we'll go by there, and yes, it's not landlocked. So like developers are flooding there too. There's this oversupply, but also people have to be in Seattle now for their jobs. I mean, we're seeing Starbucks and Amazon and Microsoft say for 5 days, whatever it is, a lot of these big companies in the office.
Yeah.
So that's another reason why we really like, Seattle is a city we do believe in, but our rents are really close to Seattle. So in terms of just NOI of the buildings and underwriting buildings, we're doing better staying, within 20 minutes or 30 minutes of Seattle, where those are really compelling rents too, because people need to be close to the city and all the people that support maybe more of the, the tech economy need to be in this area as well.
Yeah. So how are you guys? What are you seeing for like your investors' returns? I know in the Midwest, we're seeing like massive insurance is insane. Taxes are going through the roof. And so a lot of these people who bought in 2020, 21
Mhm.
had planned on refinancing the building, and now obviously rates are high, insurance has gone up, and taxes are going up. And so they're hitting this, they're not able to refinance or give their investors returns. So what are you guys seeing? Because I think that's something that you guys pride yourselves on.
Yeah, I think we've had some really amazing mentors in this, to help us. Cause, we've been in the game for 15 years, which again blew my mind when I see some syndicators and fund managers that like decided to start their first thing and hadn't actually ever done it before, or like,
Right.
so we have some time in the game, but we're also not, 65 years old and been through, 3 decades of cycles or whatever. Right. So we have those advisors on our team. And it was really interesting to me because, when rates were like 3%, on mortgages and everything was going nuts, the deals that because this was before Lauren and I put Veritas together, the deals that I was going, I was saying, hey, what happens in 5 years when rates are double? Like let's stress test that because they're going to be, like it just
Yeah.
was. It was no different than when I bought in 2010 and everything was super compressed and everybody was like, real estate dead. And I was like, okay, well, like, kind of feels to me like it's probably not going to be dead, but I don't know much more. And so we'll just figure that out over time. Right? Like, it's like we almost
Yeah.
over whatever the market's doing. Like, all we do is watch treasury yields, so like 4.5% plus whatever float on your debt. Like, that makes sense to me. Like, and when you look at like historical things, it's like where we're at right now feels like it kind of makes sense to be there for a while. And so like for us, when we look at these deals, we're just underwriting like, hey, we're going to get a 10-year fixed loan, on this deal that we're buying right now. We're locking 5.7% interest. Like,
Wow.
let's just pretend like that's going to stay the same. Let's not assume that anything is going to happen really cool in the market in terms of compression of anything. And if that does happen, our deals look better. But long-winded answer to your question, what we look for in our return and our underwriting is presuming nothing gets better. We never do any forecasting in terms of refinances. There's no refinances baked into our business plan. There are no cap rate compression events. There are no interest rate reduction events. Can we see a 15% a year return total to our investors? And like, that's what we underwrite to. And if we can see that, then we'll buy it.
Okay.
For a combination of cash flow, typically going to be 6 to 9%, blended over the whole of the deal. And then double that again in equity gain from us increasing rents and operating the business plan.
Yep.
But if something happens in the market, this is how we've been able to achieve like a high 20s return.
Yeah.
So that's what we've historically performed at. But like, there's been market forces that have, helped. And anybody that kind of says different, I don't know if they're being that accurate. In terms of how these things go, like it's really tough to find organic growth deals that are going to pencil better than 15% unless they're
Totally.
a bunch of assumptions.
Yeah, especially, I mean, in this market, like we're seeing obviously a slowdown of equity, but if you can buy right
Okay.
and increase the equity, that's phenomenal. That's the main reason how Brad and I have built our wealth is literally just finding deals. We own mostly single family and small apartment buildings. It's so funny that you brought that up because ours are all 12 units and under.
Yeah.
And I joke because people, it's like, it seems like that's going to be you're like, okay, this is the stepping stone, but it's also like the biggest headache ever
Yeah.
because they're smaller. So it's like, you're right. It's if you have one bad tenant, it can like in a bigger building,
Yeah.
you've got multiple areas. So it's like, oh, we just moved in this house. So like finding a podcast area is like, it's a different day. Every day is like a different experience. I'm like, I'm having to go in this corner of the house.
Yeah.
But, like, making it like, learning that whole thing because 'cause we've got a 6, a 10, and a 12 unit, and the 10 unit has been the most interesting thing because 'cause we'll have, like, one tenant who is bad, and it trickles. Then all of a sudden, this person stops paying rent, and then this person, like, it's some and it's like it spreads so quickly, it's such a quick snowball effect. And the 12 unit, it's like we kinda have it's like one side of the building and the other side of the building. So it's like at least this side can be totally all good and maybe we have some problems over here, but they don't really like it doesn't impact each other. But like the bigger building, it's like, okay, we've got some problems over here that we're gonna work on fixing, but the rest of the building's continuing to perform really well. Like isolated it, I guess is what I'm thinking.
Yeah.
So
It's interesting too, because you can do this in, like all the way up to food chain too, right? So like there's the pocket that you guys are in, which is awesome. I mean, like the first deal I bought was an 8 unit. I think it would have bought a 5 unit, a 12 unit, a 16 unit, a 10 unit, like I did a lot of damage in those size buildings. Like, and you can really find really good deals. You can find unsophisticated operators. And I think that general thesis exists up to about 40, 50 door buildings, like where you can find like, hey, this has been in the family for 30 years. And like,
yeah.
year to day. They don't really know what they're doing, and they haven't been for 10 years. And, their management is also totally off the charts. Their P&Ls on it, like you can find
Totally.
these, right? Like,
That's what
the
all of ours were. It was an
yeah,
equity.
believe this. I was like, hey, when somebody, we got feels like sales that we're looking at, if we get on it, they're just like horrific, in terms of like nothing makes sense. Like the P&L is categorized really strange. Like I almost get, like more excited, when I
Yeah.
see it. So, like, hey, maybe bring some stuff here to like really drive some value quickly. But then you get to and I think it's market dependent, but in our market, it's 12 to $15 million purchase prices and up. Then you start seeing, oh, like these have really only ever been owned by professional owners. Like these P&Ls are tight, like these market are kind of good, like it's like you start seeing it changes.
Yeah.
There's this myth, and that's especially important for passive investors, like people looking to invest in syndications. Like, and think a lot of times these groups say, hey, we're going to go buy this 250 unit, trophy asset and we're going to market it. And people just assume that it's more insulated. Those deals, when you really look at them and you start understanding business, are often the skinniest and the most risky because you need like top tier rents, you need really low expenses, you need everything to go really, really well.
Yeah. Makes
One
sense.
one big foundational issue in those buildings, the whole deal goes out. So
Yeah.
that comes with that with an LP, like I'm like a passive investor with invested situations. Like I would be pursuing groups buying those like 15 to 60 unit deals, like in tertiary markets that have done it before. I almost want to I want to go on the road just like purely to educate LP investors, like what questions to ask managers and just to,
It's cool. We have like this thing that we're building out because I'm sure you guys get the same thing. It's like a lot of people ask you, like, can I ask you a quick question? Like, and you get like inundated with these small questions of people who are like, you guys have obviously been super successful. So then it's like people are attracted to that. And so we're building out like an online platform that's that exact thing. It's just to educate. Like third party, this is like just raw information that you can go and utilize in your everyday like life. So you're not getting information from the banker who wants the loan. They're going to be biased in the deal. You're not getting it from the broker who's invested in the deal. So they're getting paycheck. But like, so that'd be cool. It'd be cool to have you like in there
yeah,
and do a little master class if you'd be willing.
happy to. Yeah, I think just as far as underwriting, like we don't even look for performance or growth. Like it's just an interesting thing you learn over time. But exactly what you just said, and like, that's so good. It's nice to hear other people saying the same stuff, in terms of like understand who is motivated by what, and then look at the numbers with that lens and look at it and get your own. Super for.
I do think in terms of investing, then it's an exciting time with some of the things that the administration is doing to allow people to get into more creative investment strategies. But also there has to be a lot of education with that. And I would encourage people to, even if you don't want to be a full-time real estate investor, to get good at learning a particular investment strategy. And I think when you're young, it is actually good to maybe not be as diversified and put a lot of your eggs in one basket in order to get that appreciation and that scale. I mean, that's what Alex proved with being basically 100% in real estate, starting with, 200K, turning it into a pretty massive portfolio when he was still relatively young because of that compounding effect. And that is possible, even working with a syndicator. You don't necessarily have to do it, but I think educating people on if you can find someone that will, even if you have a little bit more equity, like doing a JV deal, but they're willing to do all the work. We talk to a lot of people full time in tech. We both come from this background. I think he's the exception, being able to manage this portfolio really well. And these are really demanding jobs. And they're well paying jobs. So you shouldn't necessarily have to be forced to build your own stack. I think there are other alternatives, but I do think it's also good for people understand their investment strategy. If you're going to really say, I'm going to go big in crypto or in stock and this type of stock investing, or real estate, this type of real estate investing, to try to understand it, not necessarily to the extent of needing to do it yourself, but to be able to vet investments really, really well. And that's something that I really like those conversations because I was there so recently and he's a little bit farther away from that where he's pretty sophisticated in talking to more family offices and, but I can talk to people like myself that are working in tech, but that have saved up a really, an impressive amount of money. And they're like, I don't want 9%, I don't like how it looks if I'm just going to stick it in an index fund. I'm willing to do something more creative and having those conversations and helping people figure out, what questions to ask. Because unfortunately, there are also people out there that are making some pretty wild assumptions. And I think if you don't know this world and you're just getting into it, it would be very easy, to maybe make a poor decision. So I think trusting your operator and then we walk people through even things like, I didn't figure out rent projections. Like that data is available. And I think people, kind of figured out that there are some things that are actually not hard to check, is what we're saying we're going to get for a rent
Totally.
really feasible. And that's one of our biggest things because we're not forecasting like cap rate compressions or the market doing anything crazy or interest rates coming down. But there are a few things that people should double check us on, and just make sure that what we're saying is reasonable.
I love that. That's something that is like when I have investors that we coach, and it's like you can run rent. You can literally all you do, like go on Zillow and look up rents and see what a 2-bedroom rents for, and see if what you're being told is realistic. Especially like with a real estate agent, it's like okay, this agent brought me this deal, and they say it's going to rent for this. Go check.
Yeah.
Like just go do some due diligence, and if it checks out, like okay, seems like a no-brainer, but if it doesn't check out, like, okay, why like, that doesn't then you there's a trust factor there, right? Like, okay, then again, going back to they were just trying to they were trying to get their pad their own pockets versus actually, it's like, okay, yeah, could you get that rent on the perfect circumstances if a tornado hits in the area and people's insurance are paying out? Sure. But, like, normal circumstances, no, that doesn't really work. So I love that. Yeah, do your due diligence, double check what you're being told.
I mean, too good to be true like that. It might be too good to be true. Like lots of people that truly have built a lot of wealth and are wealthy, when they hear a reliable 15% return, they always tell us that's amazing. Like
It
that
is.
is,
Yeah.
that's great. Even less than that, quite frankly, they're happy with, if it's because it's conservative and it's safe, we're not putting ourselves in jeopardy of losing people's money and our projections are reasonable and reliable, So I think if someone's saying, I'm going to do this big development project, I'm going to double your money in 2 years. I mean, I'm not saying that that's never happened and that's awesome, but it also doesn't happen a lot of the time. And those investments tend to be riskier.
So going into personal life, how do you guys something you commented on, and I was excited to bring this up, is let's say you have a really stressful day, an investor backs out. I don't know. You guys can paint the picture, but how do you guys avoid taking that home, or how do you address that and keep your relationship separate from your business life?
I think the coolest part about running business together is having that person to lean on. So we're truly not doing this alone. And not only are we not doing it alone, but we're doing it with our person, which just makes this feel so much more feasible. I really have tremendous appreciation for all entrepreneurs now after having this experience. My dad was an entrepreneur and I always said I'd never do this because it looks so hard and stressful. And I watched him struggle. And I think the only way in which it would be very hard for me to manage all of this transparently without Alex. Cause I think he not only is, of course, the experience and being really, really good at what he does, but even more than that is probably a true partner, approaching this together and carrying the weight of stressful things together because it is stressful to run your own business and shit happens. And so I think having that person to go to at the end of the day and even during the day and just, vent with, lean on, some commiserate with, celebrate with, really makes days so much more fun.
Yeah, just add a little bit. I think if you're with the right person, it's hugely advantageous just because you don't have to go a whole day like tackling these problems and experiencing challenges and then go home and like re-explain it.
Yeah.
Like person already knows. So like at the end of the day, it's
Love
like
that.
you can actually just check out.
Yeah.
Like
Yeah.
because it's not like I have to then explain what's
Your
going on.
Saturday day.
Like almost like teach what's happening to like get the response or the empathy or whatever, right? Like
Right.
For sure.
so I think there's a huge advantage to that if you're actually partners.
Do you guys something that we learned early was like task management, and it's a norm. It's a business, right? So like in any business, there's a person responsible for X, Y, and Z, and there's a person responsible for A, B, and C. And it's like if you are both, if you don't know whose job it is, it's nobody's job, right? Or it's you're both doing the double work, and then that gets frustrating. So do you guys have like tasks? What it like within the business? What would you say each of your roles is?
Go ahead. So I think this has been particularly interesting for us because we didn't like I knew going in that she was brand new, like when we were. So in the very beginning, we both knew this was going to be my shift to drive. And then over time, we were going to figure out when Lauren was ready to step in, right? And I knew from the very beginning her strengths are people. I mean, hugely people, like which I think is the most rare thing like in the world. There's a lot of like IT people. There's not that many IT people, right? And so the lens from the beginning vision has always been I'm going to be sort of like the back end operator, and she's going to be like investor relations, networking groups, running our meetups, like people leading, right? And so that's kind of, I mean, that's where we're at now, and but it feels like we're constantly it's like a river, it changes all the time. And
Mhm.
our thing is we just make sure we communicate really clearly, like, hey, you're going to own this and I'm going to look at it.
Yeah.
Or she'll say that to me, and we just know like, and then if something falls through the cracks, it's like we're going through a big like CRM build out right now, just to make sure we're managing our investors, like potential investors well, and like things that come from things like this. And because we've kind of ramped up our marketing stuff for the last 3 to 6 months. And, it's 95% her. Like, and
Right.
I don't even really know what's going on
It
with
just
that.
shows about where his interview.
I love it.
Right. But for example, like I trust her to do a good job, and like it, it changes all the time. But I don't know if there's another way to do that too, because there's just seasons of like certain seasons
Totally.
with different things, right?
So how would people what's the best way for people to get in touch with you if they're interested in connecting about investing and learning more about what you guys offer?
I think our website, so we can maybe tag that on there or something.
Yes.
Partners.com.
What is it?
VeritasEquityPartners.com.
Perfect. Yep. We'll put that in the show notes. So anyone wanting to connect with Alex and Lauren, the website will be on there. Are you guys on Instagram, Facebook? Do you guys live in social media world at all?
No, newer kind of, like we're building out LinkedIn for sure.
Yeah, I was gonna say feel free to DM us on LinkedIn. We do most of our like social marketing there. So if you don't reach out through the website, it's just it's a lot personal to reach out to us on LinkedIn, and we're both pretty active there trying to again just educate our people. So we'll be a little bit newer content of like me. I at least try to post like most of my people and business that I've gotten out of LinkedIn has been through my actual networks, like people who do know me and trust me as a person that are learning about real estate and reaching out that way. So my content is more geared towards those people. But yeah, I love when people DM me on LinkedIn.
Love it. I'm a Facebook person, so I'm like, I almost respond faster on Facebook than text because it's like you always I market on Facebook, so it's like I'm doing Facebook lives and stuff like that. So very cool. So connect with them on LinkedIn and through their website. And then final question would be like one book, podcast, resource that you would recommend somebody who is maybe scaling, I'd say from like 10 doors to increasing their portfolio.
Oh my gosh.
Yeah, right.
I think it's less about content because this is where I think people get overloaded these days. There's so much information out there. And I find myself when I consume it, when it just comes in organically, YouTube videos, LinkedIn videos, 75% of it is not super accurate, And so like my concern with like that kind of stuff is more that what I encourage people to do is reach out directly to people like us, or somebody that you,
Yeah.
because if you're truly in it and like on brand and like you're living your kind of life purpose and you're happy, like you'll take coffee meetings and phone calls with people if they have like a meaningful, ask. And I would say I probably do 2 or 3 a week of these where somebody reached out and just said, "Hey, I just want to learn what you're doing." Not necessarily as like, I don't want to be an investor. I don't have any money. It's like, I just want to learn. Like those are some of my favorite things to do is
I
22
love that.
curious, right? So like, I think it's less about books, podcasts and things like that. And learn who the who are from those things, but then reach out directly to the people and have actual.
Yeah.
Yeah. It matters who your circle is.
Yeah. I would second that. I think there's a lot of, I love bigger buckets and stuff like that, but I do think a lot of the content makes it sound really easy. And so I think it's great to go consume some of that. And there are absolutely nuggets. Like I listen to a lot of different real estate podcasts and there's some really great things in there. And the operators come on and like little tactical things that we have actually implemented. So beneficial, but I think finding someone, a friend of a friend or someone in your local market, someone smaller, actually, I think bigger content creators, like they are getting hit up a lot. Find someone who's a little more mid tier, right? A little newer, someone like us or whoever in your local market. And I think that they would be more apt to actually sit down and share their knowledge and maybe even it goes farther than that, bring them something of value and find a way to partner with them and help them. If it's not money, maybe it's something else, but it's pretty much what I did, just saying, okay, I found someone who's done this. I just want to, if I have the opportunity to learn from him, then there's nothing more valuable than that.
That's gold. I love that because it is so true. Like finding somebody, like just plugging in and returning the value, right? Like when I coach new agents, that's something I'm like, okay, like if you can go and find an opportunity to work with a top producer and just learn from them, you're getting so much knowledge that if you can like help them, I mean, even just put packets together, or for you guys, it's like maybe drive some properties and bring up, if there's something that you guys need, like a task that you can delegate, like offer that time. Don't expect anything for it, but the mentorship in exchange for something of value is huge. So yeah, I love that. Thank you guys so much for coming on the show today. So appreciate it. I'll put your contact information in the show notes so people can get in touch with you.
Thank you so much for having us.
Thank you.
Awesome.
Thanks for tuning in to Invested Souls.
We hope you found our insights valuable and feel inspired to elevate your real estate and relationship goals.
If you enjoyed the episode, please subscribe, rate, and leave us a review. Your feedback means a lot to us.
Follow us on social media for more tips and updates, or visit bradandjamieflanagan.com. And to find out more about our Real Estate Wealth Accelerator, don't hesitate to reach out.
Until next time, keep investing in your future and nurturing your relationships. Thanks for listening to Invested Souls.